a debt spiral that cannot be solved mathematically. And since I'm an engineer and I believe in math as the base layer of everything, including language, I always rely on my math to tell me what to do. And since total global debt has reached a point where it's mathematically impossible for total global debt to get paid off by the size of the economies around the world, it's just the spiral will increase and increase, which means they have to continue to print money to solve the debt spiral. And I don't want to get too granular with you people, but that is a fact of mathematics. And if you don't understand what I'm saying, please don't manage your own money. You're too stupid, okay? If you haven't done this work, give it to a professional who understands what I'm saying and go and do what you do well, whether it's playing guitar or whether you're out there doing something really good. It shouldn't be managing your own money. Now, don't forget there is cost price inflation and there's monetary inflation. And monetary inflation drives cost inflation, but they are not correlated one-to-one. So we are living today's price inflation due to monetary inflation, which occurred over the last 10 years because of the great financial crisis, okay? Every time there was a taper tantrum, meaning the stock markets started to get nervous, the Fed would come in and ease monetary conditions and therefore make easy money, increase the money supply. When you saw what happened in COVID, it is just asymmetric growth in the money supply. That leads to inflation over time. But what you need to understand is increase in money supply makes the value of assets appear to go up when measured in a diminishing value of a unit of account. So I hate to say it, but your house really hasn't increased in value per se. It's increased in price when measured against a unit that has decreased in value. That's the US dollar or the Canadian dollar, otherwise known as fiat currency or fiat money that is not backed by anything but trust. Trust that the government won't debase your currency. Except, guess what? Every single fiat currency in the history of fiat currencies always gets abused. Why? Because of power. Why? Because it's easier to push or kick down the can down the road than deal with the problems in the here and now. So I could run through all sorts of math with you to show you that the U.S. government will never be able to pay off their debt. The only way they can satisfy that debt burden is by to continue to print more money to essentially pay the interest on that debt burden. If that's not the definition of a Ponzi, I'm not sure what is. But that's why I call fiat the Ponzi, and you need to own hard assets. Now, here, this is key. Hard assets to hedge against that. Real estate's an example of a hard asset that has protected you as an investor against a debasing currency. What are other hard assets? Obviously, gold, silver, commodities, metals. Yes, all are hard assets. I believe Bitcoin is the best horse in the race, the hardest of all hard assets. But yes, I own real estate. Yes, I own, and when I say own real estate, not just my house, I own a couple of other properties that I value to be able to give to my kids over time. And I'm confident that the price of them is measured in a unit of account called fiat will be higher when I bequeath my kids those properties. Gold. Yes, I own gold. Yes, I own silver. Yes, I own oil. The only thing I don't own are bonds, because bonds, where I spent 30 years of my career, are a fiat contract that are programmed to debase, okay? There will be a time I buy high yield bonds, but much like during the great financial crisis, I tend not to buy bonds at 100 cents on the dollar. I love to buy bonds at 25 cents on the dollar and watch them go back to 100 cents on the dollar when I've done my homework that you idiots who lent to somebody at 100 cents on the dollar made a horrible investment decision, but you're also making a horrible investment decision selling them at 25 cents on the dollar. Because that's panic. That's when you want to puke, and that's what the market does. So own hard assets. It doesn't have to be all Bitcoin, but if you buy the thesis and you don't own Bitcoin, I believe Bitcoin is the best horse in the hard asset race. Fixed supply, portable, divisible, not centralized. This is the key. Nobody controls controls Bitcoin. There's no centralized or CEO of Bitcoin. So don't confuse crypto with Bitcoin. There's only one digital asset that matters. It's called Bitcoin. The other ones are scam tokens. Okay. You can tell me all you want about Ethereum and the smart contracts. It's got a CEO. His name is Vitalik. The guy is a squid. Okay. He may be fleecing people, but don't for 1 minute accept that as mine. I own it. I own it. Bitcoin, because it's the only digital asset that hedges against the fiat Ponzi. Ethereum, Vitalik cannot even tell you what the supply of Ethereum is. Well, as far as I'm concerned, that ain't a mark of scarcity when you don't even know what the supply of Ethereum is. So I only want to talk about Bitcoin. If you own other shit coins, good on you. I don't think you're making the right investment relative to Bitcoin, which is the only pure use of blockchain technology there is, and the only truly decentralized digital asset. So full stop.